If I'm thinking about emerging market debt 101, I think Australians are incredibly lucky because the one very important feature about emerging market local currency bonds in particular is that the Aussie dollar is very highly correlated with emerging market currencies. Now, why is that? I mean, we all know that the Aussie dollar is one of the most volatile currencies in the world, yeah? You probably still remember the days when the Aussie was up at parity, and I'm sure you and your mates were all off to Hawaii and California with 3 empty suitcases and you came back with 6 full ones. And then you probably remember the days when the Aussie was down at almost 50 cents against the US. So the Aussie is a very volatile currency. And when I say the words emerging markets to clients globally, and including in Australia, they all say, "Oh no, mate, too volatile for me." Well, what is interesting is that is because so many of my peers at competitors and investment banks, whenever they come down to Australia and they talk about emerging market debt and particularly emerging market local currency bonds, all their charts look at emerging market local currency bonds through a US dollar lens. And in terms of the way clients should look at the world, you want to think about risk and return. And if you have risk on the x-axis and return on the y-axis, then you're trying to find asset classes that are top left, because top left is high return and low volatility. Now, if I look at the world in risk-return terms through the US dollar lens, then emerging market local currency bonds are top right. They're quite high yields. You can pick up yields of about 6%, but the problem is volatility. And the volatility comes through the fact that emerging market currencies are very volatile against the US dollar. But when we look at that same chart in Aussie dollar terms, then EM local currency bonds are suddenly a top left asset class. And top left means high expected returns with low levels of volatility. Now, why is there that difference? Well, the key point about emerging market local currency bonds from an Australian investor's point of view is that there is this very high correlation historically between the Aussie dollar and EMFX. So that means that Australian investors can very happily go into emerging market local currency bonds